So welcome back to the South Florida Mortgage Report. It's Billy May, your hat dude wearing mortgage guy, always joined by Craig A. Garcia, president of Capital Partners Mortgage Services in beautiful South Florida. Right on, Craig.
How you doing, Bill?
I'm doing fabulous. How about yourself?
I'm doing great. I've had a very eventful week. I had a medical procedure. I had a almost water main line break at my home.
Right?
Went to a concert and went out to dinner at formerly Tavolino's last night,
Oh,
and
wow. Yeah.
had some butter cake. So it's been a wild week.
Wow. That is a busy week for you. And you saw Sting in concert, right?
Did yes, that was
Yeah.
incredible.
Yeah. Amazing performer, amazing venue, too. So that's one of the cool things about living in South Florida. We get to watch all these great concerts.
Yeah, Sting, 74 years old and kicking butt. He
Yeah,
was
he's
great.
killing it.
Yeah, he was
Yeah.
great.
God bless Sting. He's amazing performers.
Yep.
So let's jump right into the mortgage news. While we're talking about the Freddie Mac survey rates came out, right, Craig? I guess we can kind of kick off with that briefly. I mean,
Yep.
it says rates are up kind of up to what 6.37, the national average, and kind of been trending upwards. And the bond market is kind of hovering right now about 4.3. It's kind of been about the same the past couple of weeks, but really the big news today, because it's Friday, is
Yep.
the something happened today, and we started. That's the jobs report came out this morning, and the market, the report was different than what was anticipated, and the markets didn't react the way we normally think they react, right?
That is correct. So, yeah, the non-farms payroll report comes out today. It's usually historically, for decades, the biggest, most important economic report of the month for the bond market and for interest rates. And usually, if they've created more jobs than expected, that's usually means, hey, the economy's doing good, the economy may be heating up, and usually that's bad for rates. Usually what's good for the economy and is usually bad for rates. And when the economy is weaker, that's good for mortgage rates. So less jobs than expected, typically, you would get maybe some improvement in the bond market. So today, what happened, Bill?
Well, we're expecting 55,000 jobs, and 115,000 jobs were created. And you would think, well, boy, this is going to be terrible for mortgage rates, but that's not the case today.
Yeah, so
So at least so
double the
far, so far.
It's
So
true, that's true, things can change, but
right, right.
double the expected amount of new jobs created, and bond market actually is slightly improved,
Yeah.
which is pretty odd. That's not what usually happens. And so, now the unemployment report, was expected 4.3% and came in right on the number.
Yeah.
So, but this is the thing that's held true for years in terms of this job creation number. And read an interesting thing. Matt Graham, who runs Mortgage News Daily, was talking about an explanation for this is that since November that the actual labor force has been shrinking,
Yeah.
and that this is a new development, and that's why this is not being taken quite as seriously as the bond market, and they're looking maybe more hard at the unemployment report for the surprise. And since that didn't produce a surprise that was
Right.
as expected, then the bond market is calm this morning.
Yeah.
No big move either way, but it's actually a little bit better than you would expect. Doesn't mean that your rate came down today. It's not that type of a move. It just means that the bond market generally it didn't get worse, in spite the fact that double the amount of expected jobs were created,
Yeah.
and it's being attributed to this shrinking labor force phenomenon, which is
Yeah.
interesting.
Yeah, and that's been going on for a number of reasons. Say AI is part of it too, because there's been some shrinking labor force with Meta and some other big companies as far as technical workers are concerned. But like you said, the real more focus is on that unemployment number at 4.3. It's still stable, and that's what's been kind of keeping the bond market where it is. But it's funny. Another point you brought up is that historically, this has always been the big mover for mortgage rates. But I think, especially in recent months, it's like they always have these adjustments. Like they'll come out and say, "Hey, we created X amount of jobs 1 month," and then a month or two later, they're like, "Well, we have to
Sure.
revise it and everything." And so maybe it doesn't give as much credibility to the non-farm payroll report as it used to be. I don't know, but maybe that's what it is.
Well, I think there's definitely something to that. The idea that that number has maybe it's the credibility of the number that's being reported has
Yeah,
declined because of the massive adjustments that have happened over the past couple of years.
yeah,
And then the other report that is, that's become much more prevalent as a competitor to the big number of the month has been the inflation report since the rise of inflation that started in
right.
22. And so, yeah, but yeah, that's it's interesting stuff.
Yeah, yeah. But it is interesting, and the rate question is always a rate question that people call me up. Hey, I hear stuff. Rates are getting better, rates getting worse, and this is something that people do talk about as far as that's concerned. Mortgage rates, like you said, get back to it, just really hasn't had the effect that we thought it might be today. So, but we are still in the middle of the day. Never know what's going to happen.
Yeah, yeah, no, but so far, so far so good, and and again, it's still it's good that in spite of the bond market, it's been pretty resilient overall, in spite of the fact that we still the oil situation is still not resolved. Oil prices are still very high. That's inflationary, and versus last year, we're still lower by almost a half a percent than where rates were a year ago
Right.
about this time.
Yep.
So that's positive. And, and
And
then we've got some news coming up with, the new sheriff in town at the Fed.
yes, the new sheriff. Yeah, yeah. So that's Kevin Warsh was the president's pick, and all for the whole first year of the president's term, all 2025 last year, we kept hearing about we got to change the Fed, I got to fire Powell, et cetera, et cetera. And now this guy's coming in, and there's like I says, new sheriff in town. Now his appointment was kind of fell on kind of party line, so to speak. So it should be interesting. He's being viewed as a kind of a political appointment in one sense, but what are some of his attributes you think what's going to happen with mortgage rates now that we have this new sheriff in town?
So, yeah, and you're right about they said this is the first purely ever partisan Fed chair committee vote. So I guess the committee votes 13-11 was the vote. And then his Senate confirmation vote is actually this week. But he's got this reputation for being a hawk, which is, hey, not somebody that would be cutting rates, but he's been hired by a president who has been screaming for a long time that he wants rates lower. And
Yeah.
so, what is he going to do? His first meeting as chair is not going to be until the middle of June, June 17th. And they'll be updated, the dot plot where the different Fed governors have a prediction of where they see rates going in the future, and that's the market looks at that. So that'll be interesting if any of that changes under his leadership. But with everything going on, it's hard to imagine, even if he wants to appease the guy that hired him, that he's in a position that cutting rates would be justified in with everything that's happening. The inflationary pressures of oil, which can't be understated. I mean,
Yeah.
the price of oil goes into the cost of everything because
Yeah.
everything gets transported, and that is a big factor.
And
So
then the news changes every day on that too. I mean, one day we hear that the straits are open, the next day we hear they're closed, and there's kind of inconsistent see with the news and reports and really what's going on. And I don't think the markets like that instability.
no, no, typically not. And that's why, and I would say if you are an agent listening to this, advising your customers, I would say this is a very tenuous environment for rates. So if you see an interest rate, this idea that you're going to miss out on some big drop in interest rates versus where you are now with everything that's going on, rates tend to go higher when they move and they go up. They go up faster than when they
Yeah.
come down. And
Yeah.
so I would be of the mind that in this thing where anything can happen, and you've got this real tense situation in the Middle East, that if you've got a rate and the payment works for you, I'd probably be looking to secure that.
Yes.
That'd be my
No,
opinion.
I agree. And listen, we're getting into May now. We're getting into the summer home buying season, where traditionally buyers want to move during the summer, and buyers with families and so forth. Purchase applications are up year over year, but they're up for a specific reason, though, right, Greg?
Yeah, so I did see something that said, "Hey, yeah, 20% up year over year purchase applications," which is true. It's just that when you're looking at it, I would say that last year, starting in this April time period, the market got hit with all this tariff uncertainty, and that definitely put a damper on things a year ago. So yeah, we're probably beating last year's number, which was depressed because of the market shock around tariffs that was still kind of going on. So, interestingly enough, during the war started in end of February,
Uh,
March rates kind of steadily were going up. Our applications were very strong.
right.
And then, since then, it's kind of leveled off in terms of the rates, and they've kind of settled down a little bit. But it seems to, it's certainly the pace that things have come in the door in the last 3 weeks, 4 weeks is probably slower than what it was in March, ironically.
Yeah, yeah.
So, yeah,
I think what happens in our business is that people contact us, and maybe there's like a 60 to 90-day lagging time. And so what happens after the new year, I think people were excited. They think they're going to be buying a house. Rates were trending downwards in January and February. And we
yeah,
did have like, we were pulling credit reports. People were excited. And then in March, all this stuff kind of happens. And I think some people got shocked. And, there's the buyers out there that, and especially people coming to South Florida. We live in a highly desirable area. People want to come
yeah,
here from all over the country. I mean, we've got Jeff Bezos and Mark Zuckerberg, all these famous people. And so people keep coming here. But I think it does, in my opinion, it does kind of, with the rate, maybe that move up buyer, the hey, maybe we're going to move this summer, maybe not. And when they see this instability of the market rates, and everything, maybe it's kind of silent some of those. But still, I mean, South Florida right now, there's demand. I mean, we have cash buyers, we have international buyers. There's still demand, and houses are selling, and we do see houses moving.
oh yeah. No, for sure. So, yeah, no, but it should be an interesting summer. I think we're definitely seeing good, steady activity. It's not as strong, I wouldn't say, as it was in March.
Yes.
But yeah, year over year, it looks like an increase. But month over the past couple months might seem like a little bit of a decrease.
Yeah. Yeah. So that's where we are as far as mortgage rates are concerned. And you alluded to earlier. So Kevin Warsh, the confirmation, it is this week, correct?
It is, and then yeah, yeah. So it's this week. I'm sure that will happen, and then we'll see
Yeah,
what
he
happens.
probably won't be, like, talking about anything, I would think. And you said also the first meeting isn't until June, so I don't think we're gonna hear, like, really by that time, I think people are actually, "Okay, we're looking at what's going on in the market." Also, as you said, if you see rates moving, you're gonna be buying pretty soon. There could be some different things going on in the market, so it might be a good time to lock in now because we don't really know what the future holds. It should be interesting.
Yeah, I'm curious to see. I think Powell's been a very prominent person for a number of years now, and so to see a new voice in that seat will be interesting to see how that goes.
Yeah, and I mean, this isn't a position that changes often. I remember when I got in this business in 2002, when Greenspan was still the chair, and he'd been the chair since like the 80s.
Yeah, yeah,
He was in there for a long time, and then we had what Ben Bernanke after him, and I don't remember after them. So these people don't change very often. So this guy, once he's in there, it could be for the foreseeable future. We'll see what's going on with the with the
yeah.
with the markets.
Well, Bill, it's probably a good time to remind people that we have now. Today's Friday, May 8th. 85 days from now, less than 90 days away, less than 3 mortgage payments away, are some pretty significant changes to condos that we've been talking about. And the big change that happens on August 1st is applications after August 1st. There are no more limited reviews for condominiums allowed for Fannie and Freddie. And so that means that whereas usually if we do a condo review on a project, and they're not putting 10% reserves away, 10% of the budget into the reserves, which is the piggy bank to replace the roof and all the different things that need to be replaced over time to keep the property up. If they're not putting 10% of their budget away this year, come August 1st, you used to be able to, until August 1st, you can just put some more money down and you can still get a Fannie Mae loan there as long as everything else checks out. After August 1st, you will not be able to get a Fannie Mae loan there.
That's right.
And now for people who are talking to people like us who have flexibility and we have lots of different options, those people will still have options. But there's going to be customers that have been talking to their bank, and their bank is going to have a box like this for the kind of condos they can do, and
Yeah.
that's going to be condos they can sell to Fannie and Freddie. And
Yeah.
so, after August 1st, now this condo, they might not have any option for them at all because now the condo doesn't have reserves. It's not like today you can say, hey, put 25% down for primary, put 30% down for a second home or investment
Yeah.
property, and you can still get a regular 30-year fixed rate Fannie Mae, Freddie Mac loan. After August, you won't have that. And
Yeah.
so if you are a listing agent listening to this, I would definitely try to figure out, get with a loan officer. We can help you with that, to get a budget reviewed for your listing and make sure whether or not you need to be aware of, you've got a deadline on your condo where you shouldn't be looking to take regular financing offers.
Yeah.
But yeah, literally, if you're a listing agent come September, in August, and now you get a new offer in and your condo doesn't have reserves, and that buyer is giving you a pre-approval letter from Citibank, for example,
Yeah.
there's a good chance that you could probably tell them right then and there, hey, go back to Citibank and ask them, hey, we
Yeah.
know this condo doesn't have reserves.
Yeah. Yeah. It doesn't matter if you're putting 50% down or
It
800
doesn't matter
credit
how
score.
much
It
you
doesn't
put
matter.
down.
Right.
There's a pretty good likelihood that Citibank's going to say we're not lending in that project.
Yeah.
And certainly we, at the same time, will have investors that will not lend in that project after that period of time. But then we have a battery of other options that
Right.
are still going to be available. So
Yeah.
it's a big day. It's a big
It
day
is.
for
Huge,
yeah,
huge news. If you're a listing agent if you're a buyer's agent, you show condos and these are the things that we're going to segue kind of talk about next week our future podcast. I believe we're going to look at you know type of lender, capital partners, mortgage, how we lend money. We do
sure.
conventional conforming loans, we do FHA, but we also do these outside the box loans. And on these condos, like you said, starting after August 1st, if they don't budget for reserves, you will not get a conventional conforming loan. And this is as an agent, you're really going to be prepared to understand this. Now, and I've talked to agents, Craig, that they'll say, well, I checked comps and there's a conventional loan done in there. That doesn't mean it's a conforming loan. It
That's right.
just
That's
means
right.
it's a conventional loan. Like,
That's right.
we may have done a portfolio loan on there that's still conventional. So it's very, very tricky.
That's
So
right.
if you're looking to buy or sell a condo or list a condo in these next 3 months, this could affect you for sure. And reach out to us anytime as well. Like, we can help you find out if we can finance the condo with a conventional conforming.
Absolutely. We do courtesy reviews on condominium insurance projects, information, budgets. That's a regular occurrence that we help buyers and agents with. So yeah, anything
Absolutely.
I'm gonna help.
Absolutely, sounds good. So, yeah, we had a big week. Sounds like you had a busy week this past week. So I'm probably gonna be chilling out for the weekend after your big week. Um, I had a nice week. I had a nice closing up in another part of the state, up in northern Florida. It was a VA buyer contacted me a couple of years ago through a local veterans networking, a fellow veteran, and stayed in
Yes.
contact with him for 2 years. He finally closed in his house, so and we closed in a matter of like 3 weeks. As a matter of fact, they even had to put a roof on while we were in process. So
Wow.
yeah, yeah. So everything worked out great for my buyer, and the agent were very happy. So
That's great. And speaking of that, that's probably a nice time to comment on the fact that we did 3 weeks ago, probably we did a deep dive on VA. And then something pretty cool happened this past week. We had one of the people that is friend of the show, Andrew Sesta, actually did a reaction video to that video where he
yes,
basically boiled it down to some of the things that we talked about that he thought was really eye-opening from his, veteran perspective in the
yeah,
business, and he posted his own video, and which I'll put in the show notes. I'll put a link to that video because it's pretty neat. I like what he did.
yeah,
And then we had Rick Thompson, who's a local agent here, saw
yes,
that video and said, and it's a good point. He said that's the best video I've seen on VA in 40 years, and he said
yep,
that all agents should see this so that we can properly serve our veteran community. And I agree. I mean, that's
Yes.
there are, because of the misconceptions, if you're, adversely selecting against VA offers or something like that, you
Yeah.
not only are you maybe hurting your seller and if you're a listing agent, but certainly, the veterans deserve our best and our full attention and understanding of what the options really are regarding that cool program.
Oh,
So,
absolutely. You're missing out. If you're an agent, you don't know these things about BA, and like you said, you gotta watch his video. Andrew Sesta, he is a experienced agent up in the Treasure Coast. He took it and he made it like from the point of view of a realtor, right, Craig? Like he
yeah.
stopped it and talked about stuff. And if you're a
Yeah.
realtor, you really should watch. I think he narrowed it down to about like a 15, 20-minute video as well. So you really should watch it.
Yeah, no, it was great. So anyway,
Yeah.
thank you, Andrew. It was very nice, very
Yeah.
flattering, and we always appreciate him. So
Super cool. All right, we'll wrap it up this week, and we'll get ready for a big weekend. We have the Aaron C show here locally. I never go to it because too many people. It's $300,000, 300,000 people at Fort Lauderdale Beach.
oh,
Yeah, a lot of people. So I'm gonna be staying out west in suburbia.
it sounds good. Me too.
Yes. All right, Craig. So it sounds good. Have a great weekend. We'll see you
At the
at the
closing table.
closing table. Right on. Have a good weekend.
Sounds good. You too.